Bankless Nation, we got Matt Hougan here, Chief Investment Officer over at Bitwise. Matt, how did yesterday go? Better than expectations? Met expectations? First impressions as to the ETF launch day?
I would say better than expectations.
All
These new ETH ETFs traded over $1 billion. We had positive inflows despite significant outflows from ETH. We saw over $200 million of inflows here at Bitwise. There's a chance that these things, came into the market, no big response. That's what we saw with ETH futures. That's not the world we're living in. We learned yesterday that people want ETH exposure in an ETF. It was a great day.
Matt, so I saw over a billion in trading volume, which a billion in inflows. Is it inflows or trading volume? Sorry, I was out yesterday. I'm still catching up.
Inflows would have been phenomenal.
Trading volume. Yeah.
All right.
Yeah.
On the podcast, Eric Balchunas gave this an A. He said it's not an A plus, but a solid A for the first day. What would you letter grade the first day for the Ethereum ETF?
I mean, that's a harsh grade. Let me put on my ETF hat.
You think an A is a harsh grade?
Well, let me explain why.
A is the best you can get.
There's A plus. There's A plus.
We live in an era of grade inflation. We're talking A pluses here. Let me put on my ETF hat and then I'll put on my crypto hat because it depends which perspective you're looking at. So just to level set for the non-ETF experts, the average ETF trades about $1 million in its first day.
So this is we got over $1 billion.
Yeah, this is 1,000-fold better, right? That's pretty phenomenal. I think it's the second biggest debut of any ETF in history. There have been 5,500 ETFs that have launched, covering stocks, bonds, countries, sectors, etc. No, ETH was the second best of all time. That sounds pretty good. It's only from the lens of the Bitcoin ETF, which was absolutely historic, first in its class, $4.6 billion in volume, that it's, maybe only an A. But this was a great debut. It says a lot of good things about where this is going long term.
I feel like that's always Ethereum's case. It's always like the middle child syndrome. It's always like the little brother trying to catch up to big brother. And maybe that's just like destiny for a very long time.
It seems to be the case. That is right. And graded on a curve, adjusted for its market cap, it's right in line. It was a great first day.
What would have been like if you had said like this met expectations, it didn't blow anyone away, it didn't disappoint, it was just par for the course. What kind of trading volume number might that be in the range of?
Yeah, $400-500 million.
And we're over double that. We're over double expectations.
We're over double expectations. And also, I can't stress how important this is. Even for someone inside the industry, there was a chance you get to the starting line and it just fizzles. There's 50 million, there's $100 million in trading volume. You don't know for sure. And so we completely removed that negative case. And we ended up on a very good case. We did 86% of the inflows that Bitcoin ETFs did on day one on a net basis. That's way bigger.
Wait. So trading volume was about 23%.
Yeah.
But inflows, give me that again?
It was I think in the mid 80s versus Bitcoin for day one inflows. We had a very good day.
Percentage wise, like mid 80s percentage wise, 85, like 85%, something like that.
Yeah, I mean, I should say this is probably obvious to everyone out there, but there's a big difference between trading volume and inflows.
Yes.
A product launches, people can trade it back and forth, but that doesn't mean money is coming in. We had, what was it, $590 million come into the new ETFs. That's a very, very lot. And even if you adjust out for the money that came out of ETH, it was north of $100 million. That's a great day. I mean, that's $100 million that didn't own ETH yesterday and owns it today. Let's extrapolate that out for a year. Not that we'll continue at that pace, but extrapolate like net new buyers coming into the market. It's really significant.
So I think this is some of the things that we're processing on Twitter is that in comparison to the total trading volume, the net inflows into Ethereum into the ETH ETFs have surprised to the upside. Have we understood as to why we are getting more net inflows than what would be indicated by the trading volumes?
I think we're still figuring that out. You could have firms that had, sort of pre-wired expectations. Sometimes you get inflows that aren't tied to trading volume. Or you could have just, more, maybe it's a more ownable asset and a less tradable asset. Maybe there were more traders in the Bitcoin product on day one because they expected high volatility. whereas maybe the people positioning here just are buying ETH for the long run. We don't know for sure. It's hard to tease that out with public products on day one.
So Matt, Nate Gerarsi put out a tweet. Hopefully I'm pronouncing his last name. I think you know. He says, look at Bitwise putting on yet another masterclass on how to launch an ETF. You love to see it. And then it has a tweet saying that Bitwise had $203 million of flows, just your guys' ETF. What did you guys do? What is a masterclass in an ETF launch, and how did you guys go on executing one?
I love Nate's commentary. He's covered ETFs for a long time, so that means a lot. And it is great to see us, ranked in flows right behind BlackRock and ahead of Fidelity on day one. Bitwise is 65 crypto native people. Those companies are tens of thousands of people. So
wait, but while we pause there, I want to get you to finish. But let's just go over the benchmark. So iShares, that is BlackRock, 266 million in inflows after the first day. That's the number one. Number two is ETHW. That is the Bitwise Ethereum ETF, 204, within striking distance to Larry Fink's BlackRock. Pretty impressive. And then number three is Fidelity with 71 million. I gotta say, that's a distant third. That's a bronze medal, very, very, very bronze. And then after that, no one is even close. So you guys got the silver for this, Matt. And closing in on the gold. Of course, that's just day one. It's a a longer race than one day, but punching above your weight class here.
I appreciate it. Thank you. It feels good. I think there are two big factors at work. One is Bitwise. I think we executed well. We've been in this market for 7 years, building relationships. We had good media and advertising campaign. We did an extensive amount of media yesterday. We did things like the public donation program to ETH developers. We published our ETH addresses. We gave them ENS domain names. The other piece of it, though, really goes to the community, because the lane that Bitwise is in is we are the crypto native ETF issuer in this space, right? BlackRock is a big traditional asset manager with a huge brand. So is Fidelity. We're crypto native. I think what we learned yesterday was that resonates with a lot of people, right? People want someone who's going to embrace what crypto can do from a transparency perspective. That's going to donate back to the ecosystem. So it's a victory for Bitwise, but it's also a victory, I think, for the crypto community, showing that it recognizes and wants there to be a crypto native asset manager. We happen to be that horse.
Yeah, so I asked this question on Twitter because I do have some, full confession for everyone who didn't know. Both David and I do have some bank accounts here somewhere. Okay, not completely bankless. So
you have
one of those.
One
of those is some IRA accounts that I have, like Roth IRAs, 401ks, that sort of thing. And so I have some grayscale Ether inside of those, some ETH. And I was asking crypto Twitter, hey, if I'm considering swapping for a lower fee ETF, which one should I do? And the resounding answer was ETHW, was the Bitwise Ethereum. And the reason for that was because protocol guild donations, because is it 10% of the management fees are going back to protocol guild. And so there is this niche, and apparently it's not kind of like a small niche of crypto native capital that's tied up in retirement ETFs, and that is just glad to participate with Bitwise. So that's got to be a big source of the inflows, at least from my small bubble of the world it was.
Yeah, it is a big source of the inflows, and we love to see it. It makes us feel very good. Maybe less transparent is also on the family office, RIA, professional investor side. There's often a crypto champion at those firms who is crypto native himself, even though he exists in a larger firm. And the same things that resonate, with you resonate with them as well. They care.
They're one of us, right?
They are one of us. And
we also can't ignore the impact on the marketing material that you guys have been putting out, right? That's got to have something to do with it.
The marketing team's incredible. We got a lot of credit for our ETH ads. Thanks for calling out my Twitter profile picture. I appreciated that. That was an oversight. But the team's incredibly creative, and we've gotten great resonance. ETH is decentralized, doesn't have a team that puts together those ads. So we're able to do our little piece of that. And there are plenty of other people doing their piece of that as well.
Matt, as we move forward with the story arc of the Ethereum ETF, I think we're really looking for the differences between the Bitcoin ETF to really allow Ether, the asset, to stand out. The fact that Ether, the asset, is materially different is what attracts a specific investor to Ether, the asset. And so while it's great to have another ETF shoulder to shoulder with the Bitcoin ETF, now I think people on Wall Street and TradFi are looking at two crypto asset ETFs and be like, well, now there's two of them. What do I do about this? How do I think about the differences here? Bitcoin, I think I understand Bitcoin, and now there's this Ethereum thing. And everyone in crypto understands that the Ethereum story is a little bit hard to tell. So I'm kind of looking for, like, as we move forward, the differences between these two story arcs of these ETFs. There's a headline from an article that was citing you and your some analysis that you gave at Bitwise, saying that the ETH ETFs will have a larger price impact upon Ether than the Bitcoin ETFs had on Bitcoin. And you cited three main reasons. Ether's inflation rate effectively amounts to zero. ETH does not have proof of work sell pressure, and ETH is locked up on staking. Now, I would call all of these reasons more like you kind of need to be in the know in the world of crypto. But one thing you don't need to be in the know about is that it can impact the price faster, better, quicker. Maybe you can unpack this and how these narratives, these ideas might permeate through Wall Street, and as well as your job of just like educating Wall Street on like what is Ether.
Yeah, I think this idea of price impact on flows is really important. People ask questions about that all the time. Some of them are obvious, right? Net inflation rate of ETH is zero. So the same amount of flows is going to have a larger impact than it did on Bitcoin. A significant portion of the ETH market is locked up and therefore not available for sale. It's like not in the public float. It's staked. It's used in DeFi assets. It's bridged to layer twos. That's you get to 40-45% of the market that's just not available. The thing that I think is really powerful, which isn't well understood, is that middle one, which is this difference between proof of work and proof of stake. The way I think of the market is there are two types of people. There are people who are forced to sell and people who sell if they want. And in Bitcoin, you have miners that are forced to sell because they have hard costs. And so every day you have to buy a certain amount of Bitcoin to keep it here. In ETH, you don't have any forced sellers. No one has to sell ETH. And the result is flows, you just don't start in a hole, you start level. So $100 million had to buy ETH yesterday from people who didn't have to sell, who would only sell if they want to. And that just means, particularly if we get a bullish market, if the market is going up and people are disinclined to sell their ETH, it's going to be hard for ETFs to find ETH to buy. I mean, we will, of course. I don't mean they're illiquid. Of course you can, but you're going to have to chase up price. And I think it's a really big deal. I think it's going to become apparent if we see strong inflows.
Okay, so I have maybe a dumb question at this point, but I think some listeners are asking. So we had 1.1 billion in volume. We had 100 million in inflows. Let's focus on that inflows number. 100 million in net new buying activity. And yet, Matt, the price is kind of where I left things at the opening of the day. I checked at the beginning of the day and I checked at the end, and it really hadn't moved. If what you're saying is true, wouldn't 100 million in net increase inflows buying activity, that's effectively like there's like not a lot of supply out there, wouldn't that affect price? And how come it hasn't?
Yeah, great question. I would just say patience. It hasn't, because we knew these ETFs were launching. Trading desks build up inventory in the run up to this period, and they're ready to sell it. It's not one for one. Money doesn't come in and price goes up the next day. But I can guarantee you, if there's not guarantee, compliance says I can't guarantee anything. I believe that if we see, billions of dollars of inflows, it's going to push the price of ETH up to new all-time highs. It eventually overwhelms.
Give us a number. So I saw you quoted recently 5K, and then I was looking at by end of year, maybe I was looking at where that prediction was. I couldn't quite find it. Is that a true source? Did you really say that? What are your current price predictions?
Yeah, so I have a above new all-time highs price prediction by the end of the year. The reason it's that vague is in short-term price, I think what matters is supply and demand. And I think there's significant sale pressure at any all-time high. right? When we get to an all-time high, there will just be people who want to sell. We've seen that in Bitcoin. We'll see that in ETH. I think there'll be enough demand for these ETH ETFs to push it up to all-time highs and then get through that sale wall. I think that's how much demand there is. If that happens, I don't know where it goes above that. So the thing I'm confident or feel confident about is we'll get, 5,000 or so this year if we see strong inflows, and who knows above that.
Above all-time high is my favorite chapter in any crypto bull cycle. Because, I mean, is that obvious? Is that everyone's pick too? Is that everyone's favorite movie? So
it is.
It's like price discovery, because you just don't know apart from that, because we've never been here. You're forging into new territory, right? And to your point, that reflexivity loop is now investors see, oh, ETH is making a run. I better sell some NVIDIA stock and get in on this crypto thing. And maybe that's my fantasy, but who knows where it could go from there now that we have this pipe open to traditional investors that we didn't have in previous cycles.
That is right. I want to stop on that NVIDIA thing because I know it's a fantasy, but I think it's actually true. I've been telling professional investors every time I meet with them that if you're investing in technology and you don't have ETH, you're missing a portion of the market. Look at the smartest tech investors in the world. Look at venture capitalists. They invest in AI, they invest in chips, they invest in biotech, and they invest in crypto and blockchain. If you only have the Qs and you don't have ETH, you're missing what some of the smartest investors in the world say is one of the most important areas of technology. So I don't think it's a pipe dream. I think you are going to see people sell some NVIDIA and buy some ETH just so they have tech covered.
Well, how about this from a narrative perspective, Matt? Because I want to ask you around narratives, but how about Ether is money for AI? It's money for the robots. I mean, the least banked class of entities on the internet it got to be bots. I mean, they can't go to Wells Fargo and go apply for a bank account, can they? And so maybe that's something that can take hold, but not yet. We've got some other narratives to work on first. And so I know last time you came on, Matt, you gave this brilliant elevator pitch for Ethereum that I thought was one of the best I had ever heard. And I've noticed that now that we're getting into kind of TradFi and some of these issuers, they're testing out ways to talk to their investors about Ethereum. I saw a BlackRock video that was pretty good where their main thing was, if Bitcoin is about scarcity, Ethereum is about utility. And so they focus in on this utility. I got to say, though, this word utility, I mean, what does that mean? I don't really know what that means. I've seen Bitwise really double down on a lot of different things, but almost a more Bankless theme. It's just TradFi takes weekends off. They take bank holidays. Ethereum's always going, right? Or TradFi deplatforms the pickleball player is sort of the joke, but
right.
they pick and choose who the winners are in this game. So Bitwise has taken a bit more of a crypto native type take. Anyway, what's your theory of narrative? Because it is true that Bitcoin has had this single cohesive coordinated narrative of digital gold, and everyone just repeats that and parrots it. Whereas Ethereum, we don't have consensus yet from traditional investors on what the one big narrative to invest in really is. And maybe that's just the nature of Ethereum, but it would be nice to have some cohesion here and some coordination to really figure out what works. What are you thinking at this stage in the game as far as what narrative is working?
Yeah, I love it. And I note that Bitcoin went through a number of narratives, right? It cycled through as well. So this is part of the process. What we find that's working best is it's a technology platform that most of the interesting applications in crypto are built on. If you're interested in tokenization, it's built on Ethereum. If you're interested in stable coins, issued on Ethereum. If you're interested in DeFi, most of that is built on Ethereum. DePIN, NFTs, etc. It is the fundamental platform for sort of rewiring the internet. And if you want to invest in tokenization or stable coins or the growth of DeFi or the growth of NFTs, you need to own some Ethereum. And I think that really resonates with investors. The other thing that really resonates with investors is you just want to be diversified, right? You just want to own crypto, own some Bitcoin, and own some ETH. And I recognize there are flaws with both of those analyses. The tech platform doesn't talk about ETH moneyness, which I think is very real and a very big part of the story. But that's probably a second or third meeting. The first meeting is, Bitcoin, digital gold. ETH technology platform for what? For all these things that you read about in the news. And I think that resonates with a lot of people.
So Matt, now that the opening day of the Ethereum ETFs are behind us, what does work look like at Bitwise? Are you guys on the just the ETH campaign trail? Like what's going on? Like what are the next steps? What are you guys all heads down doing?
Yeah, 100%. I use this stat all the time. We do 20,000 meetings a year with professionals.
I'm sorry. Thank you also.
Yes. So, today I'll speak to, I don't know, 300, 400, 500 investors that manage north of $100 million, talking to them about Ethereum and ETHW. And the team, the sales and distribution team, 20 plus, will do all the same things. And we'll be doing that for the next few months. And we'll be writing about ETH. And, other firms will be doing the same thing. You don't see all that. People get very excited when they see Larry Fink on TV talking about ETH, or, less excited when they see Matt Hougan on TV talking about ETH.
We get excited.
Well, I appreciate that. But behind the scenes, there are literally tens of thousands of meetings. There's a huge education platform now moving forward, and you're going to see that in the flows.
What numbers should we be looking at, do you think, in the coming, let's just give it a month in terms of like flows? Like what would maintain our A to A plus grade with respect to this ETF?
Man, if we did $1 billion in the first month, that would be outrageous. Even if we did half of that, it would be really significant.
So 500 million to $1 billion in inflows, in net inflows, would be the A to A plus rate.
That is right. Yeah, because you got to remember money's going to come out of ETH. So it has to be net flows. But yeah, if we can do that, it's a home run. It's a home run.
Well, Matt, thank you so much for your time. This has been really cool. Congrats to everyone. 10 years after the Ethereum ICO. It's like same week. And here we are. And you are going to be gonging the bell on the New York Stock Exchange for this Ethereum ETF on Friday. Is that correct?
That is right. Imagine that, ringing the bell at the New York Stock Exchange for Ethereum.
So weird.
What a day.
Bell ringing.
The juxtaposition is, I think the word oxymoron is there, but hey, we're here for it.
We'll take it. We'll take it. Well, best of luck, Matt, with the Bitwise ETHW asset, and thanks for coming on.
Thanks for having me.
If you enjoyed all of that, then you'll absolutely love the Bankless newsletter. Join over 300,000 fellow readers, all for free. Click below to sign up.